Hello, everyone. My name is Charles Bovaird, and I am moderating a panel. I am a senior contributor for Forbes, and I am vice president of content for a financial services firm named Quantum Economics. And we are here today for a panel known as the Future of CBDCs, Digital Assets and Trading. And that being said, I'd like to hand this off to the different panelists who are going to speak today and provide some excellent information.
Great, thanks very much, Charles. I guess I'll go next. My name is Pamela Draper. I'm the president and CEO of Bitvo. Bitvo is a Canadian cryptocurrency exchange. I'm also on the Fintech committee for the Canadian Blockchain Consortium and on the board for the Canadian Blockchain Association for Women.
Great. Hi, everyone. I'm Austin Hubbell, the co-founder of Consilium Crypto. Consilium is a big data company that analyzes over 17,000 tradable pairs and over 1,000 different digital assets. Our systems monitor raw transaction data and order books in real time from over 50 exchanges around the globe. And our technology captures and analyzes more transactions per month than the Toronto, London, and Hong Kong stock exchanges all combined. The core products that we build on top of these systems help funds find alpha and execute large trades in times of thin liquidity.
Hi, I'm Shone Anstey. I'm the CEO of LQwD Financial Corporation. We're a Lightning Network company that is focusing on providing liquidity for the Lightning Network. I'm also the founder and director of Blockchain Intelligence Group, an analytics firm in Vancouver. We provide risk scoring and risk mitigation for many different exchanges and law enforcement around the world. So I'm very happy to be here. Thank you.
All right. Well, thank you very much, everybody, for filling us in on that information. So I'd like to dive right into the different topics that we'd like to discuss today. So the first question I have for the panelists is, market analysts have pointed out several potential benefits that central bank digital currencies, aka CBDCs, could provide. So what do you think are the most important benefits that these government-controlled digital currencies could deliver?
I can start. So I think the biggest benefit of the government-controlled CBDCs or digital currencies is really just the benefit of a digital currency in general, in terms of the speed and efficiency, particularly in terms of cost efficiency for sending money between parties, and particularly between parties cross-border. So I think one of the clunkiest things of the existing money sending system is sending a wire to someone in another country, or even not a wire, but trying to send money, say you're from the Philippines and you're living in Canada and you're trying to send money back home to your relatives. The current system in place for sending that money takes a long time, and depending on which method you use, and is quite costly, especially if you're trying to send smaller dollar sums. You can eat up a lot of that money that you're trying to send. So CBDCs, like any digital asset, should improve the efficiency of sending that money from a time as well as a cost perspective.
Yeah, well said, Pam. Just to second that, certainly the people that I follow on Twitter and other ones like Kayla Long, she talks about CFOs having to tie up large sums of money for corporations around the world. So potentially up to 15% of their operating budget is tied up in counterparty banks around the world. And when you start to look at it from that perspective, that's very inefficient use of capital. And this is the kind of things when you're dealing with a bank CBDC, it's effectively base money. There's no risk of default in that sense, and it's immediate payment. So I think it'll really affect things on a much, for very large corporations are going to be very keen on doing that and settlements in that perspective. So we'll see where that goes.
Absolutely. Yeah, completely agree with both of those points. And I think the one thing I'd like to add there is CBDCs are a great way to start the transition away from cash. I mean, there's so many inefficiencies with cash. I think it's a little bit crazy that we're still passing around little pieces of metal and paper as IOUs. And furthermore, that there's a lot of people spending money trying to make these pieces of paper resistant to forgery, resistant to copying, and all this kind of madness that goes with cash. And lastly, just how cash can be used to finance criminal enterprise. So I think with Bitcoin, we see for every dollar worth of Bitcoin used in criminal activity, there's $270 in cash used for criminal activity. So the sooner that we can start that transition away from cash, the better.
Fabulous. Yeah, these are some excellent points. Another thing, I mean, for me personally, I think that one of the biggest benefits, or the benefit that stands out the most to me, is having greater transparency, having greater visibility into what money is actually doing in a specific economy. You know, where are the transactions taking place, which sectors are having the most activity, so that we can provide more specific policy prescriptions instead of just taking a vague, broad policy response and throwing it at a country, basically, like, you know, the sort of thing we're seeing right now. Okay, and with that, I'd like to go on to the next question. So for the panelists, what, in your opinion, would be the single most compelling reason for a government to implement a CBDC? And if you've already listed the single most compelling reason, feel free to list another one that you think is highly compelling.
I'll hop in there. It's a fear of stablecoins and fear of other governments. I mean, ultimately, you're getting down to, you know, all kinds of institutions creating their own currency. And there's a lot of history for this, because the Bank of England had to step in, because for a long time there was back in the 1804, and before that, banks and individuals, people were producing their own currency, and it created all kinds of issues. Yes, it did have some economic benefits. People weren't carrying on gold and silver, but ultimately they had issues with, you know, banks failing and people losing their money and other kinds of fraud and all kinds of other issues, and became just mayhem. Certain areas wouldn't take certain currencies, and eventually they passed that Bank Charter Act in 1844. And ever since then, the Bank of England has been the one that's been producing the currency. And I think the last private bank was allowed to produce currency up until like the 1920s and 1930s, and it was eventually phased out. So I think you're just seeing history repeat itself on a digital level here, ultimately. And it's a fascinating new technology. It's pushing the government to move faster in this area and create more efficient payment mechanisms. But fear is a good motivator.
Yeah, absolutely. As you said that question, one word came to mind, and it was relevance. Digital currencies have been in place. Bitcoin was invented over 10 years ago now. So the governments arguably are pretty late to the game in terms of getting their own digital currencies. It's probably long overdue. And if they want to stay relevant, then they have to move in that direction and relatively quickly.
Absolutely. I mean, one thing that I would add to that is just pure cost savings. Very simple. I mean, in larger countries, you can see up to 0.5% of the GDP being spent on just managing cash. And in smaller countries, sometimes it's up to 3%. So if you take 0.5% of the GDP of the US, that's $100 billion a year spent on managing cash. And I'm pretty sure we can find better use cases for that money.
Absolutely. Yeah, those are some fabulous points. So I really do appreciate that. I think that's some great info. So on the other side of the coin, what would you say are the biggest drawbacks of central bank digital currencies, at least as they are currently conceptualized? And I mention, and I say, you know, as they are currently conceptualized, because we don't have a central bank digital currency for a major economy yet. So like China hasn't rolled out their central bank digital currency for widespread use. You know, they're testing it, but it hasn't been implemented fully.
Yeah, I'd say the biggest drawback is kind of why Bitcoin was invented originally, and that's it's still backed and then therefore manipulatable by the government. So it's not truly a free market asset for the value can float based on pure supply and demand.
I agree with Pam. Certainly, I think it's well suited to a communist country like China, who's okay with centralized power, and ultimately they may even circumvent some of their own banks and go direct to retail. There's some issues with it. I know Bank of England is discussing it, and some of the things are, well, what do we do for banks who become undercapitalized because you're moving accounts away from their branches directly to central banks, and how do they collateralize loans, and what are we going to do there? So they're talking about, you know, synthetic CBDCs, where there's a token that goes back to the you know, the Bank of America, et cetera, who then is able to liquidate it through the Federal Reserve. And it brings a lot of other questions too. Do we really want the government to be getting into, you know, retail accounts, and are they really set up for that? And do we really want them to have that much information? As much as the analytics would help us on the commercial side, and being the founder of an analytics company and working with law enforcement, very clear what we can do and the power we have. That's a lot of information to be going to government's hands. Now, China, they have no problem with that. We know why, but certainly in Western nations, we should be cognizant of it and have some pushback on it. Maybe if they use zero knowledge proofs, that's certainly going to have, because, you know, as to Austin's point, we want it to mimic cash, and if it's going to be a government-backed security. But ultimately, we'll see. And in terms of, you know, will it replace cash? I don't know. To Austin's point there, I don't know if it will replace cash yet, because we talk about a war on cash, but really only 47% of the world is on the internet, and 86% in Western nations. So there's two reasons why banks are not going to necessarily go to CBDCs right away or drop cash right away. Is because, one, they have the sovereign right to print it. They're the only ones allowed to actually physically print it. That means a lot. That's a sovereign stamp. The other thing is, you know, they have to service everybody, and you can't exclude people. And right now, we're not quite there yet with the number of people who have digital representation. So.
Yeah, very good points, Shone. I would just mention that I think it's important to have that transition away from cash. So it's not as if one day cash just disappears, because you're absolutely right. That would cut out a good portion of the population, but make it more of a transition. And in terms of the risks with CBDCs, I think one of the biggest things, from my perspective at least, is technology risk. I mean, it's still very early days for this technology as a whole. I think the entire crypto market cap right now is only about a fifth of the value of Apple as a company. So we're still very small. I think it's important to really prove out those successes in small pilots and run before we walk, and not try to introduce this entirely new financial infrastructure on day one.
Yeah, that's well said. Yeah, for sure. So, I mean, to the technology point, you know, we talked about Zcash and Monero, and you know, I wrote a small paper for Homeland Security a few years back on our view of Monero and Zcash, and to that end, saying these are very new technologies, and they're going to have issues, and things are going to come up. And sure enough, they have, you know, so they're not entirely private because certain things have, you know, weren't enabled, and et cetera, et cetera. So it needs time, especially when you're doing it at such a massive scale. So they're going to have to pilot program it, and we'll see what happens. But to your point, I agree with you. The technology, it's exciting as technology people. We're in this space, and we've been in technology for a long time, and it's easy to want to run quickly, but, you know, we need to. A lot of other people who are not in our position where they understand it as we do, and the government needs to take their time and pick their place, because there's no small government error. You know, the wheel is very big, and can't afford to get it wrong this time.
Appreciate in particular the statement that the government needs to take their time and get it right. It's kind of a little bit different from some of the enthusiasm we've seen in the space at some points. Not so much now, but I mean, like say 2017, early 2018, where you know, people would just tweet stuff that would be like blockchain rules.
Yeah, we don't need the government. We don't need the government. What do we need the SEC for? We just want to issue tokens.
Yeah.
SEC, I lost my money. Can you help me? Yeah. Got it.
Bitcoin can fix that, right? No matter what it is. All right. So so now I'd like to go into somewhat of a cost and benefit analysis. I know that one thing that we have talked about repeatedly is the greater transparency that could potentially come along with CBDCs. You know, the providing policymakers with greater visibility into where transactions are taking place. And while that might make it easier for them to make effective decisions, it could also reduce privacy significantly. And I know, Shone, I believe you mentioned that actually in China, they're you know, they don't care, they don't mind if they have to reduce privacy. They've got no problem with that. But I guess from the perspective of the panelists, you know, do you think that the greater transparency would be worth the reduction in privacy?
You know, it may sound funny. It's coming from a founder of an analytics company that deals with privacy and all those kinds of things. You know, you need to have this natural push-pull that happens with it. And I'm actually writing a book on some topics here, and one of the topics I have is called proof of work for analytics. It must be difficult to do what we do as an analytics company. It mustn't be too easy. So you want to have that sweet middle ground where, yeah, you want to be able to see transparency, you want to be able to see what's going on in the network, but you don't want to make it too easy for that to do it, so you don't data mine and end up trolling people. There should be a cost to the government to be able to look into the network so that they pick and choose their fight of who they're going to go after. And they're not going to say, well, we're just going to mine through 1 million records and see what we find out of it. We don't want that. We have to push against that. On the flip side, extreme privacy can be dangerous too, right? And you've got anything that gets to the extreme tends to be a little off. I'm more of a fan of Aristotle's the golden rule, the golden mean, as it were, where things with balance tend to work better, and we think we need to have that here. No, it's certainly China. They're not going to have any issues with that. And in fact, they'll probably use it for abuse, and that's fairly scary because that's just who they are, and they're untrustworthy, and they're untrustworthy to their citizens, and they'll continue to abuse them, and they'll use this as another way to have control over them. And so hopefully we have less fear of that in the Western nations, in Canada, and the United States, and what have you. But it is definitely, we want to have that checks and balances in place there. And as Austin pointed out, the technology, even if we are using zero proofs and other things that can help mask and create aggregate analytic data, what's to say that that's not crackable in the future? Because even for, say, blockchain intelligence group, we look at stuff back in the day, Mt. Gox or Silk Road. People thought it was entirely anonymous, and we have way more powerful technology we did back then. We can find more things we ever did, looking back just a few years. And so we need to use some caution with it as we move forward. Right?
Yeah, I think it really is a double-edged sword. Running an exchange, you get to know that you can't have complete anonymity. You need data in order to prevent bad actors. And in the absence of information, bad actors are kind of free to act. But then there's two kinds of bad actors too, right? There is government bad actors and institutional bad actors that could potentially use that data for their own good as well. So I think you really have to kind of balance it. It depends whose hands it ends up in. It would be great if you could trust everyone to be safe hands for that information. Unfortunately, that's not the case. So I think that's something that we'll struggle with for a long time, the necessity for it, but the abuse of it as well.
Absolutely. I mean, there's always been a trade-off between convenience and privacy or security. And I think it really comes down to what is being surveilled and who's using these tokens or these CBDCs. So I think maybe, for example, at one level, on the institutional level, you may want some increased transparency. You may want these things being used within the banks or within large institutions, but not at a retail level. So it may be a lot better for the government to keep an eye on the much larger potential frauds and the much larger financial crimes going on out there, while not watching and seeing what I buy at the corner store, for example.
For sure. There's a cost structure to that too, because I believe it costs, say, Homeland Security, on average, it costs them $400,000 to run a case. So they want to go after bigger players. And if you're going to go after, corporations and what have you, but, to Pam's point there, she talked about privacy. And, that brings up an interesting point. You have to have clarity in order to see what's going on in your exchange or in your business or what have you. And I know we've got this, part of the crypto anarchists are like, well, everything's going to be anonymous and everything will be hidden and life will be grand. Well, bad people do bad things when they think they can get away with it. And what is morality? It's how we act when no one is looking, right? And if we think that it's going to be a perfect world because everything is anonymous, think again, that's not going to happen, because there's some very nefarious actors out there who will take advantage of it. And so you have to have that push-pull, the ability to, it's a weird thing. It must, at some level, the network must always be private, but at some level, you must always be able to look into it. And it's kind of this weird counterintuitive thing, but it's where it needs to be. And it's a little messy, but democracy's messy, right?
Yep.
Oh, okay. So yeah, one thing I'd like to point out, and I think you may very well all know more about this than I do, but there's like a fundamental difference between privacy and anonymity. I mean, anonymity is like if you run into a crowd with a sign and you have a Guy Fawkes mask on. So they know you're out there, but they don't know who you are. Whereas privacy would be like if I lived in a cave, like Smeagol from Lord of the Rings or something, you know? And I mean, I built a fire there. Nobody knows that that fire's there. They can't see into my cave, especially, you know, if I have like certain like, what am I thinking of? Raw materials that are above the cave. So even if they try to like use sonar to get into it, they can't get into it. You might have a better way of describing this than I just did.
Got a COVID mask on too, just so they can't tell you. Yeah, privacy versus anonymity for sure. You know, you want privacy. People, maybe you're buying medication online. You don't want people to know what your medication is. You don't know what other aspects of your life are. You deserve privacy. It's important. Yeah. I think, you know, when in terms of CBDCs, and this is an institutional thing. So the government is there to create a level playing field, a playing field that people are going to operate in. And you want to have clarity, you want to have accountability, which what blockchain technology brings, and it brings that accountability. And if you have the data, you can calculate the data with an analytics and get transparency into who's done what and where. And so it makes sense on a government level that you want to have some accountability for there, but certainly on like Austin's pointing out, you know, tracking individual purchases of coffee and whatever, you know, that's the things we don't want to see, right? And we want to push back on that.
Yeah, tracking purchases of coffee doesn't really sound like resources.
Yeah, that's not a good use of resources. Not particularly nefarious unless you're buying coffee from the dark web. They actually do sell. There is some place that Russians sold coffee on the dark web. I suspect something else was inside the packaging. but there's probably some other drugs or whatever. But
specific knowledge, Sean.
Blockchain intelligence group specific knowledge. Yes. I'll have my coffee now. Thank you.
Okay.
Okay. So I'd like to switch gears a little bit. So let's talk about, since one of the topics, I know we spent a lot of time talking about central bank digital currencies, but I mean, another one of the topics of this panel is digital assets. So I'd like to discuss digital assets in a broader sense. I know that industry participants have identified several benefits associated with tokenizing assets. So in your opinion, what are some of the greatest benefits of tokenizing different assets?
Well, maybe just before we get to tokenizing specific assets, digital assets in general, it comes back to the first point when we compared them to CBDCs broadly. And this was really the need for a form of currency that is unmanipulatable by a government. So Bitcoin, born out of the last financial crisis, as the US dollar devalued and people's assets devalued. And then I think it's really even more relevant in this great crisis that we're facing. We're seeing governments globally print millions and trillions of dollars. And what does that have as an impact in terms of the value of each person's currency? So with digital assets, you combine the benefits that we talked about from CBDCs of easy transfers, quick, cost efficient, but then also they completely stand alone on their own merits in terms of what that value is. It's the pure value of supply and demand for that asset, and it's not able to be manipulated by any one particular centralized party.
Would anybody else like to jump in?
Sure. Yeah, I'll jump in on that. Oh, sorry, Sean.
No, go ahead.
Yeah, I would just say that one of the biggest opportunities that we have here is the democratization of access to capital. So being able to connect entrepreneurs and investors through new channels and more efficient channels for accessing capital and new deals. I think that's just one of the biggest blue oceans in all of crypto or digital assets right now. I mean, if I want to invest $100 into a project and I do that using Tether, it's going to cost me a few pennies in fees. If I wanted to invest that same $100 into a project and I was forced to use a wire transfer, I'm going to pay $30 in fees. So as an investor, there goes 30% of my investment just trying to get that money in the pocket of the entrepreneur. And I think there's a lot of projects around the world that could really benefit from that microfinancing structure. And I think digital assets and blockchain are the perfect tool to kind of connect those two parties.
Yeah, it's interesting, Austin. To your point, you know, the dirty word ICOs. You know, we remember the heyday, and all hell breaking loose. And we're a public company on the blockchain intelligence group side, and certainly we went through the whole go public and raise capital and what have you. And I got a chance to sit on a panel for regulators. There's 30 different country regulators in a room and they've got to talk about ICOs, the good, the bad, the ugly. And one of the things I wanted to stress with them saying, the technology itself and the concept itself is not bad. It really represents the democratization of finance. Because you look at, say, our own experience of raising money, and we raised 25 million, 19.5 million in 2017, but all from sophisticated institutions and investors. When we started off, you could raise money from friends and family, you could raise money from sophisticated investors, but that's such a broad term. Like, well, they have to have a net value of X or Y. If they were educated in the space and they had a good job, they weren't allowed to invest in your deal. So from our perspective, sometimes you're taking money from investors that have deep pockets that maybe made mining and gold mining. They have no idea what we're doing, and so they're good investors in some respects, but they certainly are not aligned with the company's interests in another respect. And so there's no reason why people who are, educated in a space or worked in an area can't participate. And I know they were talking about, so putting some minimums on there saying, well, maybe we'll let it have $2,500 as a max ceiling or whatever they're going to do there to allow anybody and everybody to participate in it. And of course, that whole segment of digitization and securities, it'll continue to play out, but it really struck home for me because it was one of those frustrating points where we had to turn money away from people who we would have loved to involve in our deal. We just couldn't legally, even though they had money, they had a good paying job, and they worked in the industry, but we had to take money from, some guy who made money in drilling copper up north. What's that all about? Well, he doesn't know anything about blockchain. He doesn't even care. He just, it's a good investment. I'm going to flip it. So, and that's one thing we want to see continue to press forward in the space here. So that will at times.
One final question I have. We've got a few minutes left. So are there any assets in particular you believe should not be tokenized? For example, I know that at least one man, I believe his name is pronounced Alex Mazmej, sold tokens that gave token holders control over certain aspects of his life. Do you think that sort of thing goes too far, or are there any other examples of things that should not be tokenized?
For me personally, that would go too far, but who are we to say that for him personally, if he's of sane mind and has made this decision knowingly and willingly, and it's a decision he wanted to make, who are we to say that he's wrong? But yeah, it's definitely a personal preference. I think we touched on this a little bit in the last question too. There was the ICO craze and things that shouldn't be tokenized is this question. Part of what regulation will help with, as much as regulation itself is a double-edged sword, is helping the people who are buying these tokens just really understand what they're actually buying, making sure there's enough disclosure so the people that are selling them and the people that are buying them are fully aware of exactly what's going on, and then both parties can make informed and logical and smart decisions on that basis. If someone wants to sell something and it has value to the buyer, then by all day long, it should be a free market and they should be able to buy and sell. But there should be enough information and validated information, accuracy of that information, which is what happens in existing securities laws when companies are selling their own stock, to make sure that those parties can make those informed decisions.
Oh, amen. Well said.
Yeah, absolutely. I mean, it's a breakthrough industry, still in the early days, and there's a lot of experiments being conducted for different use cases. And as Pam said, in the end, market forces and demand of the users or investors will determine what's a success and what's not. And I think if suddenly people were raising tens of millions or hundreds of millions of dollars to tokenize their personal lives, I would take a deeper look. But for now, it's probably just another creative experiment on the road to widespread adoption. So
isn't that just
by
the
all
next
means,
step in social media?
I know what I'm going to do. I'm going to tokenize my organs. So when I die, the token holder can get like, yo, you got a heart. Congratulations. Oh, hey, you got a lung. Non-smoker. Good job. Oh, the liver.
I actually like that.
They'll pay for my funeral and give me some spending money. I don't know.
Shone, I'm in. We can do this organ company. I'm your first customer.
It'll be the TikTok for organ token. There you go. Perfect.
I'm already a donor. Might as well tokenize it.
You might as well tokenize it, right?
As long as there's disclosures about what's in that coffee.
Yeah, no comment. It's actually, it's decaf. I switched to decaf. I need to disclose everything. Damn it. Yeah. The Russians promised me it was good coffee. I don't know.
I don't know if that's going to cut it.
I've never heard of Russians selling coffee before today.
Yeah, I think it might coffee. It was amongst other paraphernalia on the dark web. Coffee and an AK, way to start the day. What can you do?
Okay, great. Well, I think on that note, I think it's time for us to wrap things up. I'd like to thank everybody who spoke on this panel, and I'd like to take a minute to thank everybody who watches this. We really appreciate you showing up and devoting your time and energy to checking out this panel. So yeah, thank you everybody, and have a great day.